Okay, I think we're live. Say that every time. I don't think it's failed once, but you never know. You never know. Let me know if you can hear me and if everything's working as you expect it to. AV good, thank you. Can hear, excellent. Loud and clear, nice. How's everyone doing? Did you have a good weekend? What's the vibe like about the market? Gucci? Yes, I think that means good. When Goblin Town, yeah. Not terribly soon, hopefully, but, you know. Can you give us NFT pics like the duck does? I'm not down bad enough to shill you JPEGs. Maybe a few more losing trades and I'll start throwing NFTs your way, but for the time being, avoidable, I think. Cool, let's get going. First things first, YouTube algo stuff. Read a comment. I've just fucked that up immediately, amazing. Leave a comment. You can read a comment if you want, but they tend to be not so great. Like the video, subscribe to the channel, do all the good stuff. And thank you to our partners at FTX for supporting us. And they also keep raising infinite amounts of money, which is pretty cool. But yeah, FTX app, get it, NFTs, crypto. You can panic message your family members to switch everything to stablecoins in one click and get them to sell the bottom. That's a pretty good way of doing things. But yeah, it's the best crypto app on the market, so go get it, be a mensch. And yeah, normal content related things. I'm still a bit under the weather. I've been sick for like a month. It's actually very annoying at this point. But nevertheless, we're here. We're here. So first things first, the Bitcoin analysis is going to be very simple. So the duck, Donald, he closed his longs. So the only acceptable scenario that I'm willing to entertain is that the market goes to infinity. Is it probable? I don't know. I don't have a setup, but just for that narrative and the max pain for the duck, I need Bitcoin to go up right now and just infinite green candles so he can feel terrible about closing his longs at the range high. That's the only way. But we will get into some actual analysis. But as far as my desires for the market go, it needs to go up so he gets regret from closing his longs. That's it. Diamond Hello is saying Donald Permabear. He really isn't. He just buys low and sells early. That's his thing. I don't like the Permabear thing. Maybe worked in 2018 for Donald, but that was during the bear market, so it's actually a pretty good thing. Okay, so on the analysis front, let's start with boomer markets because they're interesting. So my first premise here is that we still haven't decoupled or decorrelated or de-whatevered from the S&P 500. I mean, maybe this is the week, but until proven otherwise, that's, you know, still the state of affairs. We're correlated to the S&P 500. So one thing I'll add is we meme about the boomer 200-day moving average, but given, as Ledger said this morning, this is a boomer market, you kind of need to pay attention to it, right? So at the moment, and the market's above the 200 daily moving average, which is good for boomers, and I guess for us, by proxy of the correlation. One thing I will to note is the market's there's still like structural resistance overhead in the form of, you know, basic support resistance flip. The high from back in August or whenever that was, the low before the all-time high, that was broken, and that is now a level of resistance. So the path, so you know, the space that we've established between here, which is MA reclaim, and this resistance, like this gap is a good spot for stuff to bounce generally, right? And even for crypto to do well, as we've been seeing. Now, more structurally, this move lower is still a break in market structure. It's a lower low. And so if traditional technical stuff is going to work, that is to say, if this market is genuinely going to trend downwards, you would expect a lower high to be formed somewhere. Now the question is, where is that somewhere most likely to exist? And for me, it's, you know, anything that goes above this level, just starts to really look bullish and is too close, I think, to the all-time high to be useful. Accordingly, if there's anywhere for this rally to get stuffed, I mean, maybe at the top of the range, close to 47.20s, 47.30, but realistically, it's going to be really hard to make a bearish case if the market, reclaims a 200-day back above the range. I mean, who's going to be bearish here arguing for a lower high? I think that becomes a very marginal case to make. So point number one, in the interim, we have a relief rally because the 200-day, we're above it, but that's with the caveat that there's resistance at 4,600 or thereabouts, and to me this is the more important level. Like, I get the boomer trend following stuff, but I will still generally give more weight towards high time frame market structure, and high time frame market structure is bearish until proven otherwise by virtue of this leg down creating a lower low, right? So just in terms of portfolio stuff and how I'm viewing it at the very least, I'm not holding shit at the moment, but if this were to rally into and ideally somewhat through this level, maybe to give you a wick or whatever else, if you were powerless, painless, expecting zero and panicked during these lows, if it rallies into where a lower high is most likely to form out of all other places, that's a pretty good spot to maybe bin positions you don't have conviction in, or just get rid of some shit which you don't find particularly compelling or interesting, be it short-term positions or whatever else, right? So TLDR, 1, stuff is bouncing because 200 MA reclaim. 2, stuff may stop bouncing because we're close to approaching the levels that actually matter, which is weekly market structure at around the 4,600 handle or thereabouts. And I guess point 3 in brackets is that I still think we're correlated to the S&P 500, both to the upside and to the downside. I see no reason to think that relationship has changed for the time being. Does that make any sense? Okay, cool. Cool. Is there anything else I want to talk about? Let's get rid of this boomer line. No, not really. I mean, the area we pointed out of 4,600 being like a big market structure level on the weekly, it's just rather, self-evident on the, on the daily time frame as well. Just the eye test area of prior high, consolidation low, breakdown, there. I wouldn't expect it to be like I expect it to push into this level. I would be really surprised if it's like a super clean bearish retest and then it just fucking wicks to zero. I really expect a bit of churn and congestion around there, and for it not to resolve immediately. I could be wrong, but at least the area that makes the most sense and is the most relevant to me. It's funny, the first thing that comes to mind when I look at, this type of structure is when crypto collapsed in March and, market went from 7 to 7K, 10K, 7K, 0, that entire move to 3K, and ETH went to $84, $89, something like that. I remember that. I was at my desk just, that was fun. But really, the most interesting part of that wasn't the crash itself, it's what happened afterwards. Because a lot of crypto native participants had basically written off crypto. And it may not sound like it, but, there was real understandably, existential angst when it came to that COVID crash. And one thing I remember very clearly is as the market started to creep back up, there was still a ton of, and I don't even want to call it disbelief because that's a bit unfair given what the fuck just happened. Maybe skepticism about the move. And so you put those two things together, which is one, people just thought crypto had fucking died and it's over and it's going to take years to come back. And number two, that there's skepticism about any rallies and people are now hyper-focused on traditional markets. There was a really weird period of like 1 or 2 months where a ton of crypto native traders who probably didn't know what the S&P was, they were hell-bent on selling every sort of visible support resistance level on this chart and everything that should have been a bearish retest. I just remember on those specific days, like around here, you'd open up Twitter, no one cares about crypto anymore, it's fucking dead, but the entire way to make it all back, what you lost in the crypto crash, was to fucking short the bearish retest, or the supposed bearish retest, on the S&P 500. And I remember seeing it on the S&P. I remember seeing it on the Dow Jones. People were charting that as well. Is there a better chart than... Ooh, no. I don't have it in my traditional watch list. Let's see if we get... I wanted like a CFD for it, but whatever. Let's go here. Yeah, this one I remember as well. I mean, all of these structurally looks very similar, but this isn't a very useful thing to be talking about. It's just kind of background info that came into my mind while we were charting. You know, crypto's fucking dead. This rally is gonna fail, and the way you make your money back from losing it in the crypto crash is that was the, you know, what I saw a lot of, is you fucking sell the bearish retest in equities, and it's going to be a 1920s Great Depression go to zero, and then obviously those guys got blown the fuck out and everything went up. So just bear that in mind, as I'm not making a direct analogy, but if this thing looks bullish and keeps looking bullish, you got to snap out of it pretty quickly. And I know people romanticize markets crashing, being like, oh, you know, we get rid of the extra people and the froth and this and that, but, you know, it very rarely works that way. And to be completely honest, as a very, very quick side tangent, the argument that, oh, there are all these bad actors in crypto and nuking the market will get rid of them, that's just generally not true and doesn't stand up to scrutiny. And that's for two reasons. One is that the worst of the worst are just like fucking cockroaches. They will survive like a thermonuclear holocaust and still be there to like scam people in crypto. So ultimately it doesn't matter what happens outside or what the market does, those people will always be there, right? And the second point is that even if you do get rid of a couple of bad actors, there'll be 10 more to replace them. You know, you cut one head off the snake, it grows several more. So, you know, whatever. So yeah, that's the TLDR on the S&P. Yeah, I agree, Ather. The fundamentals or the macro backdrop is definitely different. I'm just talking about how it's funny that I'm looking at an S&P bearish retest, and the only other time I gave a shit about it was this time here, you know? Again, not a fractal, but it was basically, you know, this type of thing. Whee! So who knows? Who knows? Anyway. I think the actual important bit of everything I just rambled on about there was we've got a bit of space to play with, but it's going to run short. Haha, run short. But, you know, the inflection point is slightly above us. And that's where I think you can rebalance or bin things in which you don't have conviction, especially short-term positioning. I really think that's a reasonable spot to think about things. There you go, this fucking amazing content. A reasonable spot to think about things. Fucking how to say a lot without saying anything. So, and again, you'll forgive me, my health has been shit, so my patience also, with myself no less, isn't at all-time highs. Much like the market, right? Okay, so we're also coming up to the monthly close, right? It's the 31st of January. So as you can see, there's 4 hours, just under 5 hours left on this. Now, what is the basic sort of monthly structure / eye test we're dealing with? And I think it's the following. Now, there are a ton of caveats that come with it, but essentially, you have monthly support, you have monthly resistance, and you've got the monthly mid-range, right? If support holds, the next target for that move is from the range low to the range midpoint. That's it. That's the kind of eye test trade. Any time, you know, you draw a range and you're saying this is resistance, then you've got like a midpoint, and then this is the support. If you have evidence that support is going to hold, whereas the first target for a move like that or a rotation like that within a range, it's got to be the midpoint, right? Especially because we know this isn't just any midpoint. There's technical structure there. Also, all of our reversion targets, like the slower moving trend following tools, the 21 weekly and 200 whatever, all this other shit we sometimes look at, all of it seems to converge at the midpoint, which is 44 to 48, whatever, the mid to high 40s. Okay, so basic monthly premise, just kind of at a glance, Range high failed, took us to the range low with no bounces. If there's ever going to be any sort of bounce, it's got to come from the range low. And what's the visible high time frame target for a bounce that isn't total shit? And if equities don't go to zero, and if the market isn't a complete piece of crap, where is that bounce target? It's got to be at 40 whatever, this midpoint, which we'll define in a bit. Okay, now is that trend reversing? No, not necessarily. You could have a bounce into the midpoint, looks really fucking good, and then it goes to zero. And then the question is, well, would that be surprising to high time frame technicians, if you will? Fucking group of losers, if you ask me. What a terrible way to be described, right? A group of technicians. Go fix my fucking boiler. Stop looking at candlestick charts. Anyway, if I were to draw any other range, where you've got the range high, midpoint, and low, you get a failed breakout above the range high, market comes down to the range low, bounces, reaches the range midpoint, and then starts trading lower. Like, none of that is terribly surprising. So what would that look like for BTC? At the very least, in terms of rotations that are not unreasonable, or that are, the higher probability stuff, is that if this monthly doesn't roll over, the least we can reasonably ask it to do is to take it to the fucking midpoint. If you're gonna nuke me, at least give me some foreplay first, like giving me the monthly midpoint, and then you can pull the rug, right? At least have the decency to give me a bearish retest, which I'll end up buying anyway because I'm euphoric, before you pull the rug. So that when I'm broke and Bitcoin's at zero, I can look back and say, is there anything I could have done to avoid this? And I'll look back on the monthly and think, oh, I'm such an idiot. I bought resistance and I deserve what I got. And that'll give me some solace, right? So that's the monthly time frame. Okay, and I think that's likely. There's like a basic thesis. Why is Cred in a bad mood today? Why was he short? No, I was not short. I'm sick, you idiot. I'm deleting this guy's messages. Goodbye. Thank you. Yeah, so that's basically the monthly time frame. Not much else to add there. The weekly is genuinely interesting, and if we add our monthly levels to our weekly, we can actually start getting somewhere. Here we go. Let's do this. Okay. Now, this is our monthly range. We'll make it disappear for a second. But just one thing to note before that, you can see the mid-range is at 46.9. And if we add some of the... Let me just bring up my old chart, because why not? If we add our boomer moving averages to the high time frame chart, specifically the 50 weekly, the 21 weekly, 200 daily, you can see there's a lot of confluence going on, right? So if this is the midpoint of the high time frame range, and a lot of this stuff is going to, move and catch up as well, you can see that this is like the perfect spot for mean reversion, around 50, mid-40 to mid-40s. That's how to think about it. Because you've got the midpoint of the range there, and you've got all these higher time frame moving average things, where even if they don't get reclaimed, if there's going to be like a big bearish retest in the market, or a bear market bounce, right? Even the kind of worst case scenario after which we go to zero, which I don't think is likely, right? But even if you had to entertain that case, all roads lead to Rome. And Rome in this case is in the mid-40s, okay? So that makes it for a very attractive target for traders of all ilks and beliefs and timeframes. So for example, if you're mega bear, but you believe that there's going to be a bounce before it goes to zero, that's a pretty good confluent target for that bounce before it goes to zero. If your 2022 is going to be a choppy market type of participant, then in that case, that's like a no-brainer trade where you're buying the range low, the range midpoint is the first trouble area, and then you're targeting at some point later in the year the range high. But at the very least, you expect it to reach the range midpoint, right? If you're a mega bull, super cycle, whatever type of person, then historically, a lot of these uptrends have obviously taken place above the 21 weekly and the 50 weekly moving averages. So for you, this is just one big black swan correlated deviation, and then you end up reclaiming those levels, the trend following tools on this occasion, before moving higher. So it's always, at least in my system, very important to trade levels where those levels matter to a lot of participants. And that's not just from like a TA equals self-fulfilling prophecy type of thing, lol. It's just you're probably going to do well, and there's going to be pockets of liquidity and a ton of volume and money changing hands at areas where many trading systems converge. That was the case at the range low, and I think that's likely to be the case at the range midpoint should the market get there, right? So that just makes sense, and it sort of lines up with the eye test monthly time frame thing we spoke about, which is that, you know, this is essentially range low city, this is the range midpoint city, this is the range high city. Even, you know, in kind of worst case doomer scenarios, if you get the deadest of dead cats, I mean, have the decency to take it to the range midpoint before you ruin my financial future, right? That seems to be a fair ask. Okay. Now, in terms of right now, let's look at the most recent weekly close. So if this moons, I kind of want it to, because Don closed his longs, so it'd be very suitable for the market to moon, because he always sells early, Chad that he is. That's the first thing I said. When he bought the bottom, I said, you're going to sell it way too early, and he said, yeah, but now he's out, so moon it. Anyway, for me, the reason I can't get long this week, I know, collective boos, is because of the weekly close. Right, straight, you know, very straightforward reasoning. You'll recall last stream I talked about a range between 32 and 38, and that the weekly had closed below 38k, meaning that it's now resistance. And the most recent weekly close, if it had reclaimed it and closed significant, well, not significantly, because at that point, you know, fuck off, the trade is over, but closed above that weekly level, I could be getting long this week and looking for pullbacks, yada yada. But if we, you know, this weekly isn't in yet, so we can just like ignore it for a bit. The reason I'm personally not punting long this week is because I mean, this level matters, and for my money, it closed below and retested it. Therefore, it is still resistance until proven otherwise. Does that mean the market can't go up? Absolutely not. It actually just looks like it wants to, and fill in a bit of this breakdown candle into the aforementioned levels, you know, that we highlighted. But just in terms of my trading system, it's one of those boring ones where even if I think the market's going to go up, I don't have a setup. And if I don't have a setup, I don't have an edge. If I trade and I don't have an edge, it's not trading, it's gambling. That's the most basic thought process there. The second point I will make is that this, as a high time frame bottom, looks somewhat unfinished, especially on the daily time frame. There isn't really anything terribly compelling in terms of structure here that's screaming, well, that was it, and now it's up only from there. So I think it's, at least my base case, is it's fairly likely that even if the market continues here and rallies into, you know, this daily level or whatever else, I'll bring up my chart in a second, it's pretty likely, unless you get some extreme momentum like through the midpoint, at which point we all start chasing it and buy the top. But in the absence of that, if this is just like a bog standard move from the range low towards the range midpoint, I expect that to get faded to some extent, so i.e. selling, profit taking, whatever, and for the market to come down and spend more time towards the bottom of the range to form some structure, form some sort of higher low before, you know, retesting that or going to the range high, whatever it may be. This doesn't seem terribly compelling as a bottom to me, but who the fuck knows, right? Who the fuck knows? Not me, that's for sure. So TLDR, and this is kind of my upside. The thing that makes me uncomfortable is that this really needs to hurry the fuck up. We should discuss this towards the end of the stream. You know, you've got this swing high. I mean, that's kind of been spiked. This swing high. I don't think this is good for fresh longs because just the risk reward isn't there. It's the right at the top of the range. I think holding positions like maybe fine, but look, this is the top of the range. It is what it is, right? But ultimately, if the Don disbelief candle continues, I think there's a really logical area for it as a next target, and it's this range here, right? I say this range, it looks like I just drew a big box, but you see the market move down, was in balance, and then broke down. So that area is support resistance, a range, consolidation, whatever it may be, and you can see that the top side of it is the monthly level, and the bottom side is dotted because it's on a lower time frame. Specifically, it's a 4 hour, and the good old Pentoshi favorite 40.6-ish daily level overlaps there as well. So yeah, maybe we get this type of push, and then the market wants to float down and offer some semblance of a higher low. I did try to buy this, despite the weekly, like before the weekly close. I tried to get in here. Because my argument was this is the really high time frame support. You expect to get wicks through it. That's fine. So push down. This is going to be the high time frame wick portion of the move, and then pushed up and made a higher high. So I'm like, okay, at least on an intraday basis, I can buy it from the high time frame level into the first trouble area. That's like a decent trade on its face, right? That's what, at least that's worth punting, even if you're like super conservative with it. I mean, the mega conservative boomer version of it is 1.5R, which I think is totally fine, and you can then move it up or be a bit tighter with it depending on the price action. So that's the setup I was looking for. You can see I didn't get it because of course I fucking didn't, and then off it goes without me. That's fine, that's reasonable. So let me try to sum up all that fudge. Okay, first point, weekly below 38k. Weekly close, I should say, below 38k, so can't long personally, lol, seethe pleb. That's important. Boomer correlation prob still intact. Some space to keep bouncing, but watch out for boomer market structure level / retest. Okay. Short term, if pump cont, res at 40-ish. Can I be more specific? Where have I got that? Let's do what? 41 to 44. Why not? Medium term. Bottom looks unfinished. Don't be caught with pants down if pulls back. Higher low, range, low, test, etc. Mega, short term. Nah, I haven't got anything to say useful there. What else? What else have I got to say? I guess, yeah. If this is the visible high time frame bounce, high time frame target for it is 44 to 47. I think that's honestly most of it. One thing I'll note is it's important to, let me just go through these real quick, and then I might add stuff, but that's kind of it. So the weekly, for me, this is like the personal part of it, right? This is maybe its least relevant, because who fucking cares what I do? Weekly closes below 38, which is this level we talked about for ages. So I can't personally long it this week, and certainly not chase the Monday move. It just doesn't make any sense to me. It's the equivalent of buying resistance, and I just don't have a setup. Just because I don't have a setup doesn't mean there is no setup, or that you can't. I mean, you should do whatever the fuck you want, right? I'm just explaining my framework for it, and being consistent from week to week as well. The second point is the boomer correlation is probably still intact. That is to say, if the S&P decides to shit, the likelihood that we are immune from it is pretty low. But there's some space to keep bouncing, as mentioned, because the 200 boomer level's been reclaimed. But most important bit is this last bit. Watch out for the boomer market structure level / retest. that weekly lower low around 4,600. Short term, if the pump continues, I've got like 41, 44 is getting a bit of. I'd be like pretty surprised if that happens this week. The move into the high time frame mid range, it definitely could. Although I would be slightly surprised. I think, you know, one level at a time is best when you're counter trend, which we are. And the first I've got is 40, 41, most importantly. Medium term. So that's over probably what, 1 to 4 weeks, although that tends to be long term in crypto. Medium term, the bottom looks unfinished, to me at least, on like a high time frame basis. But, you know, don't be caught with your pants down if it pulls back. You know, if it does something like this and then it goes to infinity, right, and you manage to sell the higher low because in your mind never below 40k ever again, that's like a pretty shitty position to find yourself in, right? So I think continuing to have an increased tolerance to chop is probably still reasonable or should be expected. That's at least my way of thinking about it. And don't be caught with your pants down if it pulls back and does all that type of stuff. If this is the visible high time frame bounce, that monthly to monthly rotation we talked about, then the monthly targets converge at 44 to 47. You have to bear in mind that structurally, in terms of risk reward and whatever else, this is going to be the best area to get rid of positions you really don't like and just rebalance and, you know, do all that stuff you should have done at higher prices. But the corollary of that, or the unfortunate truth that follows it, is that this is also, that kind of rally is also where you'll feel most euphoric and most reluctant to cut your winners and do whatever else. So that's just like, maybe leave a note to your future self that, hey, if the market pushes towards 50, do something, you idiot, or something, whatever works for you, right? And I guess someone DM'd me asking about like the tail case, like what is your unlikely but, you know, 1 to 5% scenario? And I've got a couple of those. The one to the downside is if the entire world falls apart. My spot levels are 20k and for like a medium term bounce, but there isn't actually, if you think about it, there really isn't much technical structure or volume nodes or whatever else at 20k. It's not that important. If we're being, you know, very strict about the structure that matters, it's closer, you know, the DUX 14k level, and it's kind of this 12 to 14k last base before the infinite uptrend. I give that less than a 5% chance, probably like less than 3%, but you always have to have a, you know, bunker doomsday case in your mind, and for me that's 20k as a bounce point, and then deep value, if you will, at whatever, 12 to 14k. Very, very, very unlikely in my mind, or at least there isn't a ton of evidence to support that at the moment. But you know, I wouldn't close your mind off towards it. One thing I've learned in crypto is like the market. It's not some cringe saying that, oh, the market makes people uncomfortable or whatever else. But it's always worth having a stack of cash to deploy at really uncomfortable times. So like the market reaching 30k in the bottom of this range, this consolidation, etc. Like, is this a really uncomfortable point in the market? I mean, it depends on your positioning and what the fuck you were doing on the way up, on the way down, sure, but at least structurally this isn't like a really uncomfortable point, right? It's just a retest. There isn't anything unprecedented, black swan, oh my god, I can't believe it, about these prices. We were there not too long ago, like in the summer of last year. It's not jaw-dropping shocking. And my basic premise is crypto is so fucking weird, still, you should always have some cash set aside, even if it's, you know, a small percentage, towards jaw-dropping, shocking opportunities. And so for me, that complete tail, edge case, jaw-dropping, shocking area is this. Yeah, that's the only thing I'll add on that front. What else? I think that's it, honestly. I'm slightly concerned this is not moving quicker. This should start really printing. If it's as bullish as it is, it should really start printing through this double top. But yeah, we talked last week how 38 is resistance, and that's, you know, I mean, still technically the case. because that was this top, and you got quite a very sharp move down. You had resistance here, a slower move down, so that's kind of a sign to some extent that this is the first reaction, made a low, second reaction made a higher low, and then if those sellers get absorbed, you get a push up. I mean, where my eye goes is here. The market's at the top of the range / resistance right now. If it teleports, the teleport target is the bottom of the other range at 41k. But honestly, having missed this move here, not missed, I mean, my fucking orders didn't get filled. Given that's the high time frame trade that made sense to me, and it didn't play out, I'm kind of chilling right now. I don't want to short or sell this. It's probably very justified or reasonable as a trade, but I just don't like it, to be honest. Especially, I don't want to be the third one at the level. If you want to take it, you took it here, you feel good. You took it here, maybe you feel alright if you managed it on a low time frame. And it's a trade that's getting increasingly uncomfortable. So maybe if it really overshoots and then falls back below, I'm like, aha, that's a whole different type of setup. It's not just fading outrightly at the level, but rather it's clear failure through the level, and now this is like a backside move. Maybe that if that becomes available, I'll punt. Fresh longs, as I mentioned, because the weekly not on the table for me. Shorting here, it's the top of the range, it's at resistance, etc. Fine, it makes sense. The reason I don't like it is because it gave you this trade has happened 2 other times already, and it's paying less every single time. So could it just vanish and go to 0 from here? Sure, but at this point, given it's attempt 1, attempt 2, and this is attempt 3, I'd need to see a bit more of a trap at this level to get involved with a third time in such a short period of time. And what that would look like is, again, a failed impulse that gets faded into oblivion. That ends up being the deviation, and then the first target is the monthly level. And that would look something like, structurally, something like, whatever, I don't know, this, right? And again, not at market or anything, as in not right now, but if it turns into whatever, breakdown, boom, loses the level, this is your deviation. If you can sell the level, excellent. Target the monthly, and wherever this deviation ended up being, that's the stop. But obviously hasn't triggered yet. I'm not looking at NFTs, no. I probably should, but I don't know how you guys watch this, to be completely honest with you. Like, the amount of mental fog I've been feeling for a while now is really high, and I can tell from the fucking live streams that it's affecting me, because there's no, like, natural ebb and flow to it. I'm all over the place, and my kind of brute force way of trying to fix it is by having these long list of summary stuff, but it's not very natural. Like, for me, it's clear before the stream what I think of this market, but then trying to do the top-down stuff, which is normally seamless, I'm really fucking struggling. You know, it's been 40 minutes and I've talked about, what, 2 or 3 Bitcoin levels? I'm surprised you guys are still watching. I'm grateful for your audience, but fucking hell. That's also the reason this video has been on pause. I got as far as order clustering in the market microstructure video, and then I just stopped. I stopped because I didn't want to fucking do it, and I lost motivation. I'm finding it very hard to, you know, focus for increasingly long periods of time and actually do stuff. So normally, I sit down and the video slides, at the very least, get done in 1 day, done and dusted. This took kind of a day and a half, and then I just fucking stopped because I didn't feel like doing it, which is annoying and uncharacteristic. Just release what you've got. No. Punt a short on the 5 minute. Yeah, I want to feel something. Let's talk about ETH really quickly. So I was talking to the duck casually, and he's like, I'll buy some ETH at 400. And I'm like, 400? What the fuck are you talking about? And he's like, okay, maybe 700. I'm like, mate, you're mental. And then he said, well, maybe the fact that I'm getting these vibes at or coming from monthly support should mean that it's the bottom and it's going to bounce bigly. So, you know, some funny chat there, if you will. For ETH, it's unsurprisingly a very similar picture to what we talked about last week. It's not burnout. I've been unwell. So this is the range we had last week, where I don't know exactly where I drew the support. I think I had this consolidation or something. It doesn't really matter. It's somewhere around here. And then the resistance was this highest close at 2,700. And again, similarly, the reason I can't chase fresh ETH longs and try to catch this move is because weekly close below support, and then this is the retest candle, which also closed below. I think the more obvious retest level is understandably the one at 3k, but just for my system's sake, I still can't ignore this as resistance. So for me, the top of the range for ETH is just above 2,700. Tested once during the week, sharp sell-off, tested another time now, or close to it. Maybe it pumps back up and gives us a little kiss at the level. Yeah. You can see, you know I'm an idiot, because the setup that I wanted on BTC played out perfectly on ETH, right? High time frame level, low, wick, higher high, test the level, perfect. But I was looking for it on Bitcoin and just wasn't paying attention to ETH, because ETH BTC looked a bit crappy. So this is what I wanted, you know. High time frame level, wick of the high time frame, reclaim, you know, into resistance. That's bread and butter type of setup. Didn't trigger on Bitcoin where I was watching, triggered on ETH, but I didn't punt this. So yeah, where it is right now, I don't have any terribly insightful commentary to offer. I don't think the risk reward favors longs. Simply because of where it is, right? Even just like basic eye test of this range or whatever, you can kind of just see that very logical bounce from support, but now it's way closer to resistance than it is to support, right? Like if this is the range, which it, I think quite evidently is, right? This is it. I have the market closed below resistance on a weekly time frame, so I mean I can't do shit anyway. But even if you're trading it as on like a low time frame basis from support to resistance, B, look at where it is right now. It's right at resistance and as far away as could be from support. So if you want to trade through the range high into the next level, I think that's reasonable. But buying resistance, hoping it teleports, is probably not trading and more akin to gambling. Which doesn't mean it can't play out. It just means over a 10, 50, 100, 200 trades, it's probably not the best way to go. Does that make sense? I know it's a bit boring, but like at the end of the day, if we talked about these levels on stream and look at all the amazing interactions, right? Wow, made 1 million here, 10 million here, 10 zillion here. Like that's what a lot of like crypto TA is. You just draw like a ton of huge boxes and say, well, in my group, we had this interaction, we bought this, we sold it here into this, then there was this deviation. Well, we sold the level here, bought it back here, and then sold it here. Discord link in the description, you know, fuck's sake. So it's one thing to draw these things, but generating ideas and executing and managing your risk and managing the trade ideas themselves, etc., is something really quite different. Also, why is the market nuking? Who did this? I can't believe the Federal Reserve would allow this to happen. It's okay, the candle's green. It's bottom, obviously. Didn't you buy the dip and short the top? Yeah, Dom was trying to give me all this credit in our Casual Friday, be like, oh yeah, well, you know, we bought the bottom. And I'm like, no, you bought the bottom. I didn't do shit. I had orders here. I wanted to buy the bottom, but then because you bought the bottom, I couldn't buy the bottom, I guess, right? I I'm probably not going to rebuy this level outrightly, just because of I don't love when levels narrowly miss and it leaves a very clear swing low above where you want to trade in the first place. That usually gets overrun by some more significant margin if it gets there. So now I have to come up with a new fucking plan, which is either if this pushes up into the higher low area to try to rebuy some decent structure, right? So if it does something like this, whatever, higher high, and then starts to come down, I'd need to articulate some sort of case for a higher low on a retest of these higher time frame levels. That's one thing. Or the FOMO chase trade, if it just completely pummels on a high time frame through the midpoint, it's the disbelief trade towards the range high that I'd have to get on board. But anything else, like this is, I haven't got shit to do here. Don Frant run your bids? Yeah, I know. He bought the bottom. How rude is that? That's it. That's this week in a nutshell. Weekly closed at resistance on Bitcoin and ETH. Now it's pumping. I can't chase. I don't want to short. Can't be asked. Rip, as in my hands are tied. I'll have to buy either much higher and probably next week or something very compelling on the daily time frame if this shit turns into some mega moon reclaim, or lower. That's it. And you can see a lot of that similar type of logic in altcoins, like AVAX is an example, right? Where the range trade has essentially played out as per last week. Come on, sweetheart. What are we doing here? What are we here for? Okay. Same thing, right? You have a very clear range low. You have a very clear range high. This. The market bounced from the range low and has reached the range high. So out of your available options, you can either sell the range high, and I don't want to be short, or you fuck off and wait for it to trade either through the boundaries, in which case you've got your continuation targets, or just give you another setup at the extremes. That's it. So this is kind of the theme for this week. Solana, I think the daily cluster that the market is very keen on has, I wouldn't say been front run because just the whole market turned around, so it didn't get there. But ultimately, the first visible, like, what are the areas potentially worth trading on this chart? So definitely the weekly accumulation between, and this is, you know, this is like a range in itself, a really massive one, but purely structurally, the between 25 and 45, let's say, this reaccumulation, if it gets there, definitely worth trading. A+ structure, either outrightly or as a range or whatever. I mean, that's money. But these are wonderful areas to trade. Where else? The daily cluster, probably worth trading unless full wide market collapse, because it's the only structure outside of the market like doing an infinity bullish retest or going close to zero. So structures which you have to trade almost out of necessity are always pretty much worth paying attention to. And then the other one is obviously the old weekly range between 130, 170. But where it is right now, there's interesting stuff below us, very important stuff much below us, and then very important stuff above us. This right here, you know, I could stay here and do TA, you know, I can say this is the range high and what, like, this is recent support and like make shit up. But the fact is, I don't care. I'm not going to risk my capital on shitty structures, you know? So I'm not going to shill them to you either. I mean, a lot of this just doesn't look very good or interesting, to be honest. Does any of that make any sense? I don't know. There's like a lot of... I don't even want to call it content. There's a lot of verbiage there. We started with the S&P fly heel. You should scroll back, and that's the first thing we covered. I understood some words better than I did. I think the difficulty with a weekly stream as well is just there are fucking way too many time frames to manage. There are way too many time frames to manage. Like, I want to talk about macro, I want to talk about the weekly close and what it means, then there's like intraday stuff, and I don't know. I've never had issues, but now that my brain is literal foggy mush, clearly I took the old streams for granted. AVAX range was money? Yeah, you bet. You bet. Well played. I don't use Ichimoku anymore. Do you sleep well after these streams? No, my sleep's been terrible for like a month. I did not cover ETH BTC, no. I don't have anything really good to say or interesting to say about ETH BTC. It had a breakout attempt, and then it didn't work, and that's kind of it, right? There. I mean, maybe you get a higher low, right? Maybe. And then if it reclaims the range high, there's something there. But for the time being, the prevailing narrative, if you will, or I think the leading move, is that this breakup failed. And until it gets back above there, not particularly interesting. Either that or the bottom of the range. Everything else is... There's literally bang in the middle. Look at it, right? Range high, deviation, midpoint, no one gives a shit, range low below us. What are the setups in this type of scenario, right? You've got range high. Let's even like... we can, you know... properly build on this thing if you want. What do you do here? What do you do? You know that the range midpoint is a coin toss at best. The higher probability setups are either at support or through resistance, not in the middle. Don't diddle in the middle. So yeah, ETH BTC, whatever. So 1 hour later, up or down? Yes, that's exactly what people tune in for. Hey Cred, have you ever touched on how to catch bottom wicks? Yeah, wait for the liquidations to stop. Or buy the final part of liquidations. But it's not very important in general. This really needs to hurry up. It starts to get concerning if this doesn't hurry the fuck up. Because in my mind, as soon as it broke above 38.2, I'm like, well, it had effort number 1, effort number 2. This should be teleport type of territory. So why isn't it teleporting? Maybe I'm being impatient. I don't know. Or just use order flow. I mean, what do you want to look at? $15 a bit high. You normally have the M5, but I haven't got the template saved on this. Do you ever use EXO charts only for Confluence? Honestly, I more look at EXO. I mean, the answer is yes, but I don't do enough short-term trading to make a big deal out of it. So I mostly use it for my interest and as entertainment on another screen. But I would be very hard-pressed to argue that I've got some sort of order flow edge for a low time frame strategy that's really important to my trading. I don't. But it helps to understand what's going on. Yeah, this template's definitely old. Any other data stuff? Let me just look up. Hold on. I want to see where the quarterlies are sitting. Yeah, I mean, quarterly basis still at like 4.5%, 5%. There's nothing to write home about there. Funding. Yeah. Nothing too interesting on the futures data side of things, to be completely honest. Meh. No obvious, no obvious divergence. I mean, not at the moment, anyway. Anything I can try to answer? Any questions? Why aren't you using body instead of wick? I just think it works better with candle bodies, honestly. Experience, I guess, is the answer. Anything on FTM? No. The answer is no, not really. It's stuck at a... I know this looks ugly, but that's still a weekly cluster. And then if you look on the daily, you can kind of see the technical significance of that area, which is the previous bottom of this range. Got a bit messy, but lower low, lower high, right? And then for me, this is at resistance. I don't know what the setup here would be, right? I simply don't. It looks like you had a reclaim attempt here, but it didn't play out. So not terribly compelling. I mean, it's not clean in the first place. This is not, not the best chart in the world. But if you were going to bend the TA to make a case for it, it had to have been here. When you had the breakdown into a reclaim. That should have been it, but it wasn't, so still at resistance in my mind. I think you should ask CBS about Cold Blood Schiller, about macro div stuff. That's his cup of tea. Not mine. Do you draw liquidity levels for take profit or buying areas? No, not in general, no. What do you guys think? This breakout through 38 and this Monday move, fake or real? So real, if you think it's going to just basically continue towards the high time frame, 40 plus, 41 plus type of area. Fake, if you think this is going to be another ugly wick and then ultimately trade lower. Just real or fake? What do you think? Fake, 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 fake. Might scam higher, but looks real sus. Fake. Fake, real, 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 fake, fake. Wow, most people think fake, huh? Well, you're all wrong because the 4-hour closed above it. Get fucked. No, I'm joking, but yeah. I mean, that is somewhat significant, right? The first 4-hour close above it. Again, my eye test goes towards this. But also the fact that, again, the weekly close below it, so even if it is the biggest, best breakout in the world, there's absolutely nothing I can do about it. My only bias is I want it to go up so Don feels bad, but I don't know how virtuous that is. You think it's a dud move? I believe the correct term is scam pump. Rip Joe Rogan? What? Let it dump so we can short alts. So many people fake, may be real. Yeah, that's the meta-analysis, I guess, right? How's the order flow video coming? I need to finish the section on order clustering, then do liquidation cascades, which are somewhat related, then order book analysis, which I really don't want to do, and then a bit on market makers. I don't even know if this section is necessary. I think it is because of how shit the first video is. And then, obviously record the video and upload it, etc. It'll be this week. Probably on like a Wednesday, Thursday. Ooh, that's a flip. Heard Bukele is looking for you. Yeah, I'm sure he is. Waiting for that video? Yeah, me too. Oh, we're getting there. Getting there. Yeah, the slow grinds are always sus. I don't know. I was expecting a few more fireworks, but maybe I'm just being unreasonable. I still think in any case the market was very nice to give you this before breaking down, because that just makes it a very logical target for any momentum trades or whatever. No setup for me still. This would have been it. Didn't trigger. Don't want to short unless something really spicy happens. So yeah. I think that's all I've got. I don't want to start wasting your time at this point, to be honest. Hope that was, well, it was something, but we're at least the larger themes with the levels we're looking at, etc., consistent week to week. So go read the summary write-ups we do to kind of see where my head's at. Or if you want to have an easier way of doing this, just go to trletter.com. It's the free newsletter I write with the duck. It's just got text and no rambling. It's got levels, text, our views, that's it. strongly recommend it because I'm not to be trusted with the good old live streams at this point, obviously. That's all from me. Newsletter Tuesday, video later this week, and then maybe another casual Friday or a podcast. We'll see what's up. Thanks for hanging out. Do all the YouTube algo, like, subscribe type of things, and I will see you next Monday. Bye-bye.